if you do trade FTSE or other stocks, if you stocks on FTSE, which is FTSE, then you might want to look at this news, because services, more of the companies in UK are services based rather than manufacturing based. So anything that gives us a good result in services would actually affect the market in a positive way, for stock market in a positive way. Again, that's then we have a 1250, we followed by a quite late in the afternoon, because that's quite late in Japan. 1250 p.m. in UK is quite late in Japan, but we do have a monetary policy statement. It's a quite important statement to look out for. It's going to be affecting JPY pairs quite heavily. So that, I mean, quite a strong week, guys, in terms of trading next week. It's going to be really volatile compared to this week. Then we have Thursday. Again, one of the major news we always look for is the jobless claims that comes out every Thursday at 1:30. So again, keeping a close eye on that news. Last week it went up for about 20k, I think. So again, if it drops again from 860, let's say 860 to 700 or 750 k jobless claims, would be a good sign, a very good bullish sign for dollar, and we could see dollar going up. Followed by how really Powell testifies in coming previous 2 days. So that's going to be a really effective news for dollar. Finishing on Friday, we have some crude durable goods orders. Again, more of these news is for stocks rather than currency itself. So again, any good news for durable orders will actually be a bullish news for stocks such as the stocks which produce goods, not stocks that do services. So if you're looking at some tech stock, that's most likely not going to be affected by this news. But if you're looking at stocks such as Coca-Cola or car manufacturing company stocks, then it's going to be more affected on that, because they actually produce goods and they actually deliver goods, rather than companies such as Zoom or Facebook or Google. All those companies don't produce goods. They are online service companies, right? So this news will affect more of stocks of goods companies such as car manufacturing companies and other companies which actually manufacture stuff. So that's our outlook for news. Quite a volatile week, guys. So it's going to be a good trading week next week. We are going to see some good opportunities coming next week, and it's going to be a very good week in terms of trading. We're going to have volatility nearly every day, compared to some weeks where there's only volatility between Wednesday and Thursday. Sometimes only Thursday, because that's the middle of the week, and that's when they actually markets usually wrapping up, or buyers are putting the position in for next week. So keeping a close eye how that Monday starts, but Monday is going to be quite explosive when the Powell speaks. So US dollar is going to be quite good to look at. And now we're going to quickly look at gold, oil, and silver. So we're going to start with gold firstly. So gold, again, quite a ranging mode. So I'm just going to draw a big box here to show you this what range basically is in the range right now. So we can clearly see when the price is at this level is always up and down, up and down. Well, yesterday did reach 1945, closed just below the resistance of 1950. So again, it'll be quite interesting to see where dollar really opens up on Sunday night. If it opens above this level and over the Sunday night and Monday morning, if dollar closes above this level, then it might be a sign to get a long in dollar, look to buy dollar all the way back to 1958, because that is a quite of a zone as well. This is a ranging zone as well. So this whole zone is a ranging, so you can take this is a major range zone between 1950 and 1960 is a major range zone. Then of course, whenever price reaches this level here, we are seeing it always goes up, except one occasion when price really dropped all the way back to 1944, then rose quite strongly. You can see how strongly it rose upwards with two massive bullish green candles. So again, we can conclude that this is a very strong support level. And Monday morning we do see a price close above 1952. Then it might be a good sign for us to really long this pair, and probably get into the pair and look for entries all the way up to 1960 as a buy. And once the price reaches here, of course, we already know this is a quite strong selling pressure at this level here of 1960 pivot level. So when the price is at this level, we can look for a sell. We can look to sell this pair all the way back to lows of 1950. So let's see how market moves on Monday morning. It's going to be quite important thing on Monday morning. Let's quickly look at oil. So we usually trade US oil, which is so we just get like this. So I'm going to show you. Well, it's not coming up, so let me just write oil. US oil. There we go. So US oil is one of the most traded oil, in terms of trading. The most traded is US oil and Brent crude oil. So USL is US oil, of course US oil, and Brent crude oil is UK oil. So is those two are the oil that mostly traded, but most of the time the traded oil is US oil. So US oil currently at level of 40.88, quite a strong resistance, to be honest. If I go to longer time frame, it is actually a quite strong resistance right now at 41.45. Last time price was above this on 4th of September. So, and even then it only went as high as 41. So we could see oil price rise dollar or so around this level. So I'm just going to draw my resistance here. But to be honest, it has made a new lower low. So if I just draw my trend line, you will know what I mean by that. So you can see this trend line resistance. It tested quite a few times. So 1, 2, 3, 4, 5, 6, 7, about 8 times it tested, and every time it tested, hardly able to break this level. So maybe when the market really opens up on Monday morning, we can see probably we look to short oil back to support level of 39.49. I think 39.49. This level here, 39.57. We could see oil dropping back to this support level of this EMA support level of 39.59, and from there maybe look for a buy all the way back to this trendline resistance of 41.45. So we could see a ping pong effect in oil, because oil most likely is going to drop back, test back to 39.59, then probably go back up to 40, and once that, maybe then we could see a breakout and rise above 41.50, and then finally oil reaching the highs of 43, 49. So again, oil is going to be quite volatile, because quite a few news for oil, every news that comes out that affects stocks affects oil as well. And if the core durable goods kind of news affects stocks more, because of course you need oil for machinery. Every industry that produces goods, it needs oil. So the more demand in oil, the more price rises. The more less demand in oil, then when the price drops. So you might have seen let's go back in some months. Let me just go monthly, and we go back when the whole coronavirus issue started. So you could see this was the around April time, when the coronavirus was really on its peak and a lot of companies were shut down. There was hardly any demand for oil. We could see oil went back to as low as 0.05 pence per barrel. So per barrel was nearly 0.05 pence, and now it's all the way back to $40. So yeah, if somebody bought at this level, they're nearly millionaires. Depends what lot size they use, but yeah, they're nearly millionaires, because buying at 0.05 dollar or barrel all the way back to $40. So that's a massive jump. But that could happen, when the oil depends on the demands of the companies. So if there's a recession, or if companies are shutting down due to some kind of pandemic, then it's most likely to short oil. But now, as a lot of companies are opening up, a lot of industries are opening up, so we might see a demand in oil again. But for now, the rising coronavirus cases in both US and UK is going to affect oil market. So we could see oil level dropping back to 39.54 before we find some support at this level, and might see a retest of 40.95. So that's the outlook for oil, guys. Most likely it's going to drop. There's a chance of dropping, but again, if the Powell testifies and says something positive for stocks, then might see oil going up back to 41.88, and probably then we might see some kind of momentum downwards. So oil is definitely going to drop back to this level, to retest this level, or even as low as 40.32 before it really rises above this level. But we could see oil testing back to 41.79 before it drops back to lows of 39.49. Let's quickly look at silver. So silver and gold are basically nearly same thing. It's called XAGUSD. So XAGUSD is silver ticker, and XAUUSD is a gold ticker. So quickly going to look at silver right now. So silver, as you know, it doesn't move a lot. So do not expect silver to move. Silver is one of the slowest moving pairs, but when it does move, it moves crazy. Also, one thing you need to know, remember with silver, it moves in points. So you have to be really careful when trading silver. It takes a lot of margin out of your trading account. So if you do have a trading account which is less than £1,000, I do not recommend trading silver. If you have more than £1,000, then only you can trade silver, because if you trade silver, it takes a lot of margin. So it basically, you can trade about 10 forex pairs with one silver trade. That's how big the gap is in terms of margin. So you have to be really careful when trading silver. So silver currently, you can clearly see on longer time frame quite a strong range. The range of 27,399 is a resistance, and 26.52 is a support level. We can clearly see a massive spikes every time price reaches this level. So that gives us a good sign that this is quite a strong support level. So we are seeing silver dropping back to, dropping right now a level of 26.769. But overall, because it's silver dropping back to lows of 26.52, a good position to buy. So I will let the silver drop back to this support level, then look to buy, because this is a good place to enter the trade. If you enter the trade here as a sell, it could easily go up. Like this previous candle price came as low as this, then shot up upwards, so you could get caught in that kind of momentum. So let silver fall. We already know this is a quite strong support level, so this would be a good place for us to enter the silver. And once we enter the silver, we could most likely try to hold this all the way back to levels of 27.40. But if we think there's kind of some kind of pullback at this resistance level of EMA resistance, the EMA resistance of 27.03, then we might take out the trade. And then once the trade breaks above this EMA, then we look to enter the trade again, probably hold another position after breakout. So silver again, ranging mode. No real trend, but it could turn into trend really easily. So something good or bad in dollar could affect silver quite strongly. So again, keeping a close eye on all this three pairs: gold, oil, and silver. Next, we're looking at how stocks and dollar correlate. So I'm just gonna quickly go to a stock from dollar. So that's US stock is US 30 or is US 30. Okay, I'm gonna look at US 30 because that's more of a stable stock to look at. It's not as crazy as Nasdaq and SP 500. So I'm gonna get rid of these lines quickly. So that's US stocks. Let me just pull up DXY here. I'm just gonna pull up Euro USD. It'd be easier. So let's see USD. So we can clearly see the blue line is the USD, and of course the candles are stocks. So you can clearly see whenever stocks rises, when the stock rises, euro drops. So that's basically a sign that if you see a rising stock, you might want to sell euro. That means the dollar is rising. The stocks are rising. That means dollar is rising with the stocks. But that's not always the case, of course. So let's see over here. When stocks was falling, euro was falling with it, and that means dollar was rising. Sometimes you have to be careful. So some news will affect, for example, interest rate decision. A news like interest rate decision that comes out and they say that they're going to lower the interest rate. That's a very good sign for stocks, but very bad sign for dollar. So let's say I'm just gonna get rid of this because it's getting confusing. So let's say that interest rate news comes out tomorrow or day after tomorrow, and they say they're going to cut interest rates. So what will happen is stocks will shoot up. Stocks will actually just shoot up around, all the way back up. If the interest rate is getting lowered, that's a good sign for investors. For stock investors, what that means basically is general public is going to start pulling out their savings because they're not going to get enough interest on the savings. So they're going to start pulling out the savings. Then they're going to start investing in what companies, right? So for example, they'll be like, okay, no point me putting my money in bank anymore. Let me put the money out and start buying a new car. So what's that good? That's good for stocks like GM, General Motors, or Toyota or Ford, or where General Motors is for, or Tesla. So all those companies will actually start selling more cars if the interest rate is down, because a lot of people start pulling out their money and they will start buying houses. They will start buying, but houses prices are, because interest are lower, that means they'll be getting less interest charged when they buy a house on their mortgage. So there'll be more house sales, there'll be more sales in terms of goods. That's why we see stock prices rising, but it's not good for dollar because dollar value drops, because when interest rate goes down, the dollar value drops. That's why we see a massive spike downwards. But when interest rate rises, for example, tomorrow they say, okay, we'll be hiking interest rate because inflation is quite low right now. And to get the inflation balanced, they need to hike the interest rate. So then what will happen is stock will just plummet. So you might see a stock plummet all the way. They can usually when the interest rate get hiked, stock plummets quite strongly because it has happened. Because it doesn't happen quite. It's very rare for them to really hike interest rates. Usually they always keep interest rate stable for quite some years. But when they do hike it or reduce it, it gives a major ripple in stock market. So when interest rate gets hiked, stock prices drops, and dollar price rises, because that means the value of dollar is going to get strong again. People will start putting their money into the banks again, into the savings, and that gives more value to that gives more value to dollar. That's how basically stocks and US dollars correlated. So sometimes when stocks are going up, that means dollar is going down, and when the dollar is going up, that means stocks are going down. That's how they are correlated, guys. So again, if you want more info on how to use dollar and stock correlation, you can always join VIP, and we are more than happy to help you answer all of your questions when you do join VIP, guys. Now I'm going to talk about something really important: trading mindset and how not to close trade in profit. So what happens sometimes is that as a trader, as a novice trader, what people do is they close their profits quite early and they let their losses run. So that's one of the major issues in terms of trading. So what happened is, for example, you were looking to buy and you had a good entry. This is a very good entry on GPSD, and you bought here, but you closed as soon as you saw probably like a 20 pip move, and you're like, let me get out the trade. But you see the trade went all the way up to 1.30, so you could have actually caught 200 pips rather than 20 pips. But imagine you were buying, let's say you were buying here, okay, and you knew that prices dropped below, but you're like, okay, let me just keep holding, and you lost nearly 200 pips. You will hold 200 pips loss, but you won't hold 20 pips profit. So that's the mindset. What you need to know is basically, that's why your analysis needs to be on point. You need to know what's happening with your analysis. So for example, let me just talk about losses. So for example, you took a buy trade at this level. Let me get rid of these lines. So I'm just going to focus here. So you took a buy trade at this level, right, guys? And you know that price went up. Okay, you got some in profit. So price went, okay, you took, let's say you took a buy trade at 1.300. Price went as high as 1.33. So you got 33 pip trade in profit. Then you got greedy. Then you're like, you know what? It's gonna go high. It'll go might go up to 1.36. I might be able to catch 65 pips. But then what happened? So first thing, what you should have done is, after trade moves 20 pips, always moves your SL to entry. What basically means is change your SL, modify your SL price to your entry price. If you don't know how to do that, please do ask me. I will send you a video on how to do that, and keep doing it, and you'll be most likely gonna save your trade. You're not gonna get caught in this massive momentum downwards. So what will happen is, let's say XYZ trader got into 33 pip profit and then got greedy. Then he didn't move his SL to entry. He left his entry at this level. And what happened is price dropped. You can see the drop, massive drop, and he got a drawdown of all the back to 1.2. So if you took it there, he went, wow, that's big. That's 80 pip loss. So he would have probably, what should have done straight away when he saw this massive momentum downwards, whenever the price reached his entry, he should have just waited for a few minutes, and you should have seen the momentum. And the momentum is as strong as this. So when a price rises 33 pips and drops so strongly, it's always best to get out the trade straight away. It's always best to close the trade and cut the losses straight away, because this kind of momentum usually means that price is going to go down more lower. So that's one thing you guys need to learn, guys. Whenever trade goes in profit, is in decent profit. So do not move your SL to entry when it's less than 20 pips. I mean, if you're trading if you're taking one TP, if you're trading two TPs, of course, after one TP, one hits, you can always move your SL to entry. But if you're trading with one trade only, always keep moving your SL up. Always keep trailing your stop loss. So 33 profit, move your SL to entry. Now your trade is secured. Now, even if price does move all the way back to your entry, you will only lose nothing. You will only lose probably like pence. Also, I know it doesn't sound good, because you're probably making £30, but then all of a sudden you didn't make any money. But think like this, you didn't lose anything. Trading is all about not losing. It's not about winning. In trading, you will never win. You just have to cut your losses so you can come on top every day, or every week, or every month, or every year, or every decade, for that matter. Big investors look at their trading portfolios every decade. So that's what basically means. For example, let's look at buy right now, and let's talk about, let's say XYZ bought his trade right here. So he knew it was a good buy. Price went, let's say 33 profit. He did everything right. He moved the SL to entry. But the thing he did wrong was he closed as soon as the price reached this level. Why? Because he got scared. He probably saw a pullback. For example, it went all the way up there. Let's say it went all the way up here. Then, okay, let's say he went all the way up there. Then he saw a pullback. Price came nearly, let's say he bought here. So that was 76. It went all the way up to 19. That's about 50 pip movement. Then it came back down to 28, 35. So he came back down, let's say 50 pips. So he was on about 65 pip profit, then came back to 50 pips. So he got scared. He's like, you know what? Price is going to go down. And he closed the trade. But what you should have done is, you should have just trailed his stop loss. So, you could have trailed his stop loss all the way back to lows of 1.2814. So move your stop loss, keep moving your stop loss up and up. So once you're in, let's say you're in 60 pip profit now. So after you're trading 20 pip profit, move your SL to entry. Once you're in 60 pip profit, move your SL 20 pip above. So now you have so now if trade does come back and hits your SL, you still make 20 pip profit. So if you guys understanding what I mean, it might be confusing, but if you don't understand, always message me. I'll be more than happy to help you again. So what happens is, let's say he closed the trade here, but what you could have done is move this SL just to buy here and let the trade run, let the trade do his work. So you can clearly see price went here and start going up again. So that's why it means let your cut your losses short and let your profits run. So after something as a big momentum as this, and as a big spike there and a big push down here, it usually means that there's a very strong buy pressure and price is most likely going to go up. This is just a resistance level, a small resistance level, but sellers are waiting. They're only able to push price this down. If this was a big momentum, it would have been something like this. So if this was a big momentum, we would have seen a bigger, candle body of a red candle. So when a red candle body is as small as this, that just shows that there were not enough sellers in the market. It's only a, a small term momentum downwards, and buyers will come in and push the price upwards. So that's what happens. So again, so if you do get entries such as this, always keep moving your sell, guys. Move your sell to entry after 20 pip movement. Once your price that moves 60 pips, move your SL 20 pip above. Once your price has moved 80 pip, move your SL to 40 pip. Keep moving your SL up and up and up and up. And and when you're ready, when you think, okay, you know what, it's probably gonna reach a very strong resistance level, such as this, close the trade, guys. So there you go. You could have, you don't have to worry about your trading closing loss, because you're moving your sell. So you keep trailing your stop loss. That's how that's how you catch big pips. That's how you catch big momentums in trading. You do not catch big momentum trading by closing trades early and letting your losses run. You catch big momentum in trading by moving your sell, trailing your stop loss, and closing your shorts, closing your losses early. All right, guys, that's it for today's Zoom call. Hopefully it was helpful as in terms of trading mindset. If you, again, if you do join VIP, we help you with your mindset. So if you have any questions, you can always ask me, and I'll be more than happy to help you guys. Thank you so much for joining, and hope you have a good weekend. Thank you, Pablo.